Thank you for joining us today, day 3 of the Singapore FinTech Festival. Today's session is on real-time payments, the need for speed. My name is Richard O. I lead the Payment Network Partnerships team here in Asia Pacific for Rapyd. We build and maintain the partnerships that builds into Rapyd's network so that we could provide the services that we do under our single API. Today, I have Zennon Kapron joining us as our guest speaker. Would you like to introduce yourself?
Sure. Hi, everyone. Thanks for coming. My name is Zennon Kapron. Currently, I run a market research and consulting company focused on the financial industry, with offices here in Singapore and Shanghai and Taipei. We work with financial institutions, financial technology companies, and other players in the market to help understand what's happening in Asia. Briefly on my background, I'm Canadian by birth, grew up in the States, started off my career at Citibank in New York many years ago, then was in Europe, always on the technology side, so looking at development and operations for technology organizations. When I left, I was the head of technology for Citigroup in Portugal, and then came out to China with Intel in 2004. I lived in China for about 14 years, and then moved down to Singapore a couple of years ago to help build out our Southeast Asia business.
Awesome. Okay. Well, I think all of you guys know what a RTP network is. You're probably using it, within your daily lives, particularly on your banking app, and as a way to send money to, different parties in real time. But the way it came about is, in most countries, there's 2 ways to send money between, bank accounts, right? One, there's a wire, which is fast, but quite expensive. The second part was ACH or gyro, which was more batch-based. It was kind of to solve the cost problem, but the problem is that it wasn't in real time. So the banks and central banks, the regulators, they all got together and said we need to create a better solution. And so came the RTP networks, which really solves for the speed problem, the cost problem, and also sort of the data problem. And so it works really well because you're able to set up different proxies around your bank account so that it's easier for you to share your bank account information. I know you guys have probably all tried to send a wire. You have to get the SWIFT address. You got to put in your account number. Or if you try to set up a gyro, you had to put in your bank branch code plus your account number, which is prone to a lot of errors, right? But the cool thing about RTP networks is you're able to set up a proxy to your account so that you're easily able to share that. There are services from the network that allows you to kind of check the validity of the address. You can see who owns it, et cetera. So you feel a lot more confidence when you're making the payment. And you also get real-time feedback, so that's also very nice when it comes to payments. Zennon, can you talk a little bit about how you're seeing this set up across the Asia Pacific network in different countries and kind of the structure around the network?
Sure. Yeah, I mean, when you talk about real-time payments, those examples you gave are great. And for many of us, it's kind of the new normal. I mean, I know when I log on to a banking app or onto the website, and as a person, as an individual retail consumer, you don't pay to make an immediate payment. And even for companies, it's 50 cents versus 20 cents or 30 cents for a gyro. So it's almost become the new normal in many cases. And Asia, historically, was actually the birthplace of the real-time payment. Japan had a system set up in the 70s that it wasn't 24/7, but at least it was real time for the time that it was operating. And that was the start of real-time payments. And more in kind of the modernization of payment systems that we've seen across the world is the UK and the faster payment scheme there. That was, I believe, 2008, 2010 was set up around there. And that kind of launched the current wave of innovation that we've seen. And Richard's point was very apt that a lot of this is regulatory driven. You have many markets that the payment systems haven't been updated for a while. I mean, being an American, the ACH system in the States is pretty horrible and pretty inexcusable considering the technology that's out there. It's never, in many of these cases, it's never been a technology problem in terms of real-time payments. It's been more of a a standards and operations problem, getting all the banks onto some of these networks has been the challenge. But Asia has really pushed forward in this, and so when you look across the region, I mean, obviously Singapore is on real-time payments, Australia, Malaysia, China, Japan, Korea, Hong Kong now as well. Nearly all of the countries across the region either are on real-time payments or have a plan to be in the next couple of years, which really does make it the new normal. And then once you have that in place, all of the different products and services you can layer on top of that become pretty compelling. I mean, you mentioned the proxy services like PayNow as an example. I mean, that's layered on top of the fast network here in Singapore, and it enables you to have that rich functionality as an individual or an SME. And for individuals, when you look at the use cases around it, and it's always nice to receive, you know, if you go out to dinner and you split the bill, it's always nice to receive that money very quickly. But for the SMEs, especially the SMEs that are involved in manufacturing, a lot of inputs and outputs, that real-time payment as opposed to a 2 or 3D Giro payment is very helpful. Because when you're looking at cash flow and your ability to manage cash flow, when you're able to send and receive the money faster, it can mean, you know, it can be very positive for your business as opposed to slower payments. So I think, you know, it's the last 5 to 10 years have been really exciting in terms of the implementation of real-time payments. I think that going forward is the future is really about what can we do with them. And things like PayNow are really just the start of what's possible.
Speaking of PayNow, I mean, can you explain to the audience a little bit about the difference between the fast network and what PayNow is?
Yeah, so effectively, the fast network is the real-time payment system. So if you looked at any real-time payment central infrastructure in any country, so in Thailand, the base, I forget the name of the base system there, ITX, IPS, I believe. And then fast here, PayNet in Malaysia, and then you have the overlay services that sit on top of that. So PayNow is the proxy service, as you mentioned, that allows you to associate a mobile phone number with the system. UPI would be a good example in India. It's kind of this overlay service that sits on top of the basic real-time payment rails.
Yeah. And I think, you know, our great marketing director told me there's about 54 of these networks globally already, which is quite impressive. And I think it's working quite well on a domestic basis. But what are you seeing in the future for these networks to interact more on a cross-border basis and, you know, between, you know, these networks?
Yeah, and I think over the next couple of years, I mean, if we didn't have COVID, I think things would have moved faster in this space. But if you look at a cross-border transaction, whether it's a bank payment or an e-commerce payment, a card payment, so cards, as an example, I mean, cards you would typically be using for cross-border e-commerce or tourism in normal circumstances. And I was quite shocked when I moved to Singapore a couple of years ago because my credit card, actually all my credit cards have a pretty hefty foreign transaction fee. So on a premium card in the US, you'd probably pay about 1% foreign transaction fee. So that basically means that's the fee that MasterCard or Visa would take for handling the FX. But outside of that, the credit card doesn't typically charge you a foreign transaction fee. But you know, the Singaporean cards will charge you 3%, 3 to 5%, depending on the card. And then whatever the FX spread is on top of that. So all of a sudden, that cross-border transaction when you're using a card is very expensive to do. Similarly, as we all know from SWIFT transactions or standard bank wires, I mean, the sending fee, the corresponding banking fee, and the receiving fee can add up to $50 or $60, depending on the banks that you're using and the route that it takes. So there's a lot of fat in these cross-border transactions. And when you look at ASEAN in general being a growth area and a lot of cooperation between the countries, I think we're going to see a lot more in linkages between the real-time payment systems. So I mean, that was one of the things that was announced yesterday or the day before by Ravi Menon from the MAS was the linkage between PayNow and PromptPay. So if you haven't read about that, it's quite interesting. So it's the idea that a PromptPay user in Thailand, so PromptPay being the equivalent in Thailand of PayNow, would be able to come to Singapore, scan a QR code here in Singapore, and settle the transaction through the PromptPay PayNow network. So the merchant here would settle out with PromptPay, the payment would come directly would settle through PayNow, and then the issuing bank or the bank that's tied into the prompt pay wallet would settle through prompt pay. And when you look at the development of these real-time payment systems across the region, it really opens up a lot of doors, because once you have QR code standardization between countries, you have the rails, and it's a matter of connecting those two systems together. And so we're seeing a lot of development around that. I mean, there was the announcement from the MAS, and then SWIFT is also looking at this as well. So I guess it was probably about a year and a half ago, almost 2 years ago now, SWIFT made a transaction from China to Australia in under a minute through their GPI network. It had all of the same costs that you would expect from a SWIFT payment, but they were able to basically distribute it out through NPP, the real-time payment system in Australia. And so that really speeds up the transactions that's happening. And so I think, although the banks don't want to move off this heavy amount of, float and spread that they get on the FX, payments essentially are a race to zero in a lot of these markets domestically, and increasingly cross-border as well. So I think we'll see a lot more development. And ASEAN itself has really kind of, to be honest, failed at getting a payment network in place. I mean, if you look at Asia, if you look at any logical place to have a real-time cross-border payment network, it would be ASEAN. I mean, it's not going to happen between China and Japan, or China and Korea, or Korea and Japan. There's so many political issues there and challenges there that with the ASEAN organization, in theory, it would come out of that. And the ASEAN organization actually does have a payments committee or a group that's been looking at this, but they've so far failed to really make much traction in this. So we did a report earlier this year with ACI looking at this, and we believe that it will come down to bilateral relationships. So you'll have Thailand, Singapore connecting, and then Singapore, Indonesia, and then Indonesia to Thailand. And eventually that will just form the de facto ASEAN payments network. And for consumers or merchants, that's great, right? Because for the merchant, not only you, when you use your card and go to Thailand, are paying the 3%, the merchant is paying the merchant discount rate as well to process that transaction. So, adding that all up, it's about 8%. And if you can cut that down for both the consumer and the merchant, it helps growth, right? I mean, that's 1% more revenue potentially for the merchant. And that's something that all of the governments are really quite interested in behind.
Yeah. Well, you talked about GPI a little bit, but
the bank account was opened in, and so they pull out the 20 pages of paper again. So I ended up, whenever I had to pay my rent every 2 months, and this wasn't a lot of money. I mean, it was $1,000 or something like this. You couldn't take out that much money from the ATM at the time in China, and so I had to go to the teller at ICBC. I had to take my money out, put it in a paper bag, walk it across the street to the Bank of China, and deposit it in my landlord's bank account, which I argue was the first use of mobile payments in China. But flash forward 14 years later, I was paying my staff, and still do pay my staff, using Alipay. I would split the bill using WeChat Pay. I invested in a product from Baidu, which is essentially the Google of China. So the transformation that's happened within the financial industry in China has just been tremendous over the past 2 decades pretty much now that this has all started. And it started really with Alipay in 2003, 2004. And this kind of goes back to the point around finality of payments. When you look at e-commerce in China, one of the challenges was the payment, right? So they had cash on delivery, so you could order something online, it would be delivered to you, and then you'd pay the delivery person in cash, which isn't ideal because the merchant could send you bricks. You may not want the item. The delivery person may run off with the money. It didn't really enable trust in that transaction. Now, at that point in China, China UnionPay had an online payment system, but that was also not reputable, right? So you could make the transaction, but then if there was a problem with the item, you had to get the merchant to send you the money back. Like there was no chargeback or anything, which isn't ideal for e-commerce either, right? Because it doesn't give you that element. So Alipay was focused specifically on trust around e-commerce. So it implemented with an escrow system where you buy something today and the money is only released once you accept it or when 2 weeks have passed. The money is released to the merchant. So it was really, I think when we look at fintech in general, and maybe not so much this year, but a couple years ago at the FinTech Festival and other events, it's very easy to get distracted by shiny technology. So you say blockchain, AI, and you see all these really interesting solutions. But when you look at the solutions that have really worked in the payment space, and more specifically around real-time payments, they're really focused on a use case and a point of friction. I mean, if you look at how that evolved in China, Alipay solved the issue of trust in e-commerce. And then one thing that Alipay noticed was that more people were leaving money on their bank accounts, or on their Alipay wallets, rather. So they launched a wealth management product called Yuebao. Now, if you look at buying a wealth management product before Yuebao was launched, again, you would have to go to the bank branch, you would have to sit down with a teller, they'd bring out the 20 pages of paper, they'd explain to you the risk tolerances, you'd have to sign off on all of these things, and then you'd have to lock up a minimum of $1,000 equivalent for at least a month, which for the average Chinese individual, when you consider the per capita income in the country, is a big ask. Even for me, putting away $1,000 for a month is like, to get 1%, it's a bit ridiculous. But with Yuebao, you could invest as little as 1 renminbi, so the equivalent of about 25, 30 Singapore cents. You invest today, you start earning interest tomorrow, and you could take it out, and it would be in your account within a couple of hours, if not less. And at the very beginning, when it launched, it was open to foreigners, and I could use it. And again, there's nothing flashy about that technology. They just created a financial product, and they democratized access, addressing that point of friction. And so when you look at the history of fintech in China across all of these different issues, I mean, there's obviously a little bit of challenge around peer-to-peer lending and everything that's happening with Ant Group right now, but the focus of these companies like Ant Group and Tencent was on solving these points of friction in the marketplace. China has, and has had since, for about 2 decades as well, a real-time payment system.
Sure.
Domestically, but again, it's challenging to use. You have account numbers, you have to cater for 1 billion people plus, another couple 100 million businesses. So the account numbers are really long. It's very difficult to make payments in that environment. So you have effectively what are these overlay services like Alipay and WeChat Pay that made things much easier in that environment.
Yeah, I think China's probably a whole session in of itself. So we should definitely do that on the next time. What kind of challenges do you see as businesses and consumers start adopting this technology?
Well, you mentioned fraud. I mean, fraud is a good one. Most of the fraud systems today are not designed for real-time payments. They're designed for payments that are slower. So, fraud is an issue around that. When you have overlay services as well, you can have QR code fraud. So one of the things that happened in China, and it's probably happened here as well, is when you're scanning a static QR code, if somebody just comes in and puts their QR code on top of yours, all of a sudden your money's going to their account rather than your account. So there's challenges around fraud. For the banks themselves, there is a cost involved in getting into these ecosystems. I think Singapore managed that reasonably well with FAST, but Australia more recently, the banks were really reluctant to join the network because they don't always have the business model figured out. Around that, if you're investing tens of millions of dollars to get on top of to get into this network, what is the business model behind that? How are you going to make money off that? So I think the banks have also faced a challenge around trying to figure out the business model that matters and makes sense for them in that space. So.
Yeah, I think the funny thing with the RTP network is when they launched it in the U.S., the payment was so easy that fraudsters were creating their virtual accounts or their virtual address, getting money into the account and then disappearing just like that, right? So, there are things that definitely need to be worked out as it becomes more mainstream. Last but not least, I mean, I think there was a session yesterday around direct access to FAST from non-bank institutions. I think we've seen that in Hong Kong before as well. What do you think is the role of that, as we move forward in terms of letting non-banks participate?
Yeah, well, I think it kind of comes down to cost, right? Because, I mean, TransferWise, as an example, they have been connected into FAST through a bank, through their local partner bank since they've set up, right? So, they've had that FAST functionality for a while now. So, for them, it just means that they can connect into the FAST network without having to go through a bank to send it out, which could involve less cost in that. I think just in general, when you look at Singapore and open banking and APIs, I mean, that's the direction the country is going or the industry is going in terms of democratizing access. I do personally think it's a little bit, the whole open banking idea, and we had, I think earlier this week or late last week was the financial portal, I forget what it's called, that the MAS has set up so that you can see all of your accounts on one page. When I was at Citibank, I started at Citibank in 1998, and they had just launched My City, which is the same idea, but it was just using screen scraping. So it would go into all of your other accounts, screen scrape them, and then bring the data back into My City. And they canned the initiative shortly afterwards. I mean, the idea is that it allows you to have a better view of your financial situation. I mean, I would argue that most of us in this room, I mean, just the fact that you're coming to a discussion on real-time payments means you're nerded out enough in the financial industry that you kind of know what your situation is. So I think that it's interesting, but it remains to be seen how successful some of these initiatives are. I mean, sure, the platforms will be there, but just because you have a platform that you can see all of your finances on one screen doesn't mean it's going to make you any better in saving for retirement or saving for a house or paying off your credit card debt or whatever the case may be.
Yep.
So I think it's a good step, and I think the industry is doing what it can. But at the end of the day, a lot of these things are behavioral on the end of things. But certainly for fintechs, it makes it much easier. I can't see it changing the game for a lot of fintechs. So it would, if you're looking at doing payments and you wanted to access the fast network, you probably already were through a partnership with a bank or a company such as yourselves to be able to tie into that. But now you can do it at a lower cost potentially.
Yeah, I think for us the main thing is that we love our bank partners, but as the network provides more functionality and features and mandated payment services or refunds and things of that nature, a technology company like ourselves are able to adapt those types of solutions a lot more quickly and give access to businesses and consumers. So I think it's important for technology companies to get that access so that they could kind of further accelerate the adoption of these technologies. Yeah. Before we take any questions, any final thoughts you want to share?
No, I think we've covered a lot. I mean, I think it's real-time payments has ebbed and flowed over the number of years. I mean, I remember going to Sibos in 2007 or so when it was in Sydney and learning about real-time payments for the first time, and that was when the UK was just starting to look at it and transition. So to see everything that's happened since then, I think it's really compelling, especially when you look at a lot of the challenges that the region faces. I mean, you still have a section of the population, both in terms of retail and businesses that are underserved by traditional financial institutions or traditional financial products. And so all of the things that we've been talking about in real-time payments and open banking and access to systems like FAST open up the doors to be able to bring some of these people into the financial ecosystem, which, at the end of the day, benefits everyone.
Awesome.
Yeah.
Well, thank you. Are there any questions from the audience?
Hi, thanks, Zennon. Sorry, I hope I'm pronouncing that.
Zennon.
Yeah. So, building on one of your comments earlier about like banks and how they think about their investment in participating in these networks, we'd love to get your insight on what you think the best kind of governing model is or ownership model of these different real-time payment networks is, and from the perspective of the future evolution and roadmap of these real-time payment networks, arguably there are more features that can be built on top of these networks, online mandates like request to pay and so on, but it does require some level of like all these participants playing ball in that network. So we'd love to get your insight on what you think has been the most successful model of operating like these networks.
Yeah, I mean, when you look at a national system like Singapore or Australia, it's a little bit easier to get your ducks in the row because you have essentially one government or one industry that's moving towards a particular direction, and real-time payment central infrastructure in nearly all cases is a public initiative, meaning that the government is pushing it. Now, there will be private players involved, obviously. Like for Australia, SWIFT was involved in implementing that. ACI involved in Malaysia in that initiative. Vocalink in the UK originally for the UK faster payments. So I think in terms of the implementation domestically, it's got to be the governments that are doing it. And when you look at cross-border, that's where it gets more complicated. And I think that's where ASEAN has really struggled, is because ownership, right? Who owns the network? What currency is the network settled in? I mean, if you look at the largest global real-time payment networks, it's SEPA, right, in Europe. And it makes it easier because there's one common currency for most of the participants. You have one regulator, the European Central Bank, that's behind it. So it makes it much easier to overcome those challenges around governance and who owns it and what currencies it's settled in. But in Asia, we just don't have that. In terms of where it could go, I think Richard pointed out a good point, is that when we look at the evolution of Pay Now just here in Singapore, I mean, you have the FAST, obviously, that was set up, and then the government was kind of pushing forward with Pay Now, and it's great, right? Because it provides interoperability between all of the banks and that basic level of overlay service. So I think the government should be involved in digital ID, KYC onto these systems, because that essentially needs to be a public good, and then the basic functionality and infrastructure. But once you get into things like request to pay, it could be third-party companies that are driving it. And to a certain extent, really the government should get out of the way and let the private sector innovate on top of that, once they've put the infrastructure in place. And I think that's probably what we'll see going forward, is that there will be some, banks will implement on top of that, but largely outside of things like standardization and interoperability. So the other thing is like interoperability with QR codes right now. I believe that's supposed to happen next year, that at some point you'll be able to go to you'll be able to use GrabPay at a Pay Now merchant, or you'll be able to use Dash at a GrabPay merchant. So that interoperability between networks will be there, and that probably should be the responsibility of the government as well. But I think it really comes into play when you have multiple different competing entities. I mean, if you look at payment systems globally, there's always been either a third party, and there's been some kind of third party entity involved in that, whether it be SWIFT or the European Central Bank or the Singapore government. Private sector is creating that infrastructure. Hasn't been their, exactly their success point in getting that done. Because, you may not want to use a payments network that Goldman Sachs has developed or JP Morgan has developed, but you're happy to use one that Singapore Inc. has developed.
But if you look at the Singapore way, like say Pay Now is operated, right? You have like yes, the government is involved, but you also have the Association of Banks, and like you said, everybody has their own interests, and everybody looks at their investment in participating, like based on their own individual interests, and so if there was like a way forward, and there were say specific features that would benefit like the overall like ecosystem, you still do need like each of these participants to kind of align and agree on what's needed.
Yeah, but I mean, now that they're opening up access, do you need DBS to agree on a request to pay functionality, or could you get a third party to provide that functionality? I think if there's a benefit to the ecosystem, there's probably revenue involved in that, and there's somebody that wants to take that revenue. So if that's not a bank, it could be a third-party provider that's able to do that. So, I mean, maybe I'm putting too much faith in the innovation of the private sector, but I think, what we've seen, I mean, there's plenty of capable companies around that could address that issue and provide that functionality.
I think you're right on the associations and the schemes that allow the payments. I think where we've seen the most success of RTP networks is really where the government really pushes to open up the access to everybody. So some governments, they leave it with the banks, and then they restrict the access, and you don't see the take up as much. I think the Singapore government has done a really great job of just really opening this up so that a lot of people have access. The Indian government, they created their own consumer app to show how this could actually work. So having a really progressive government that actually pushes these associations is actually quite important. Yeah.
Hi, my name is Luis. I'm a student from INSEAD. I guess it's also related to the previous question, but what do you think of the VIA network as potentially ASEAN's unified cross-border payments network?
Which is BIA?
VIA, the VIA network.
Oh, VIA. Oh, okay.
VIA.
I mean, I think for the cross-border space is getting very competitive, right? I mean, there's a lot of providers that are in that space. I think there will be multiple different solutions. I mean, there are multiple different solutions for moving money. Just using the example of Singapore, Thailand, right? I mean, you can use TransferWise, you can use Neum, you can use a bank, you can use the Dash wallet, you can use the Via network. I mean, there's so many different ways to move money around there that I think there won't be a single winner necessarily in that space. You know, the competition is healthy to drive down the fees and make it easier. You know, TransferWise has kind of proved that, right? It's one of the few unicorn fintechs that's profitable, especially when you compare it to the digital banks and the other players in that. So I don't think there's going to be one solution that does it, and nor do I think the governments will. I think the ASEAN, it's too late for the ASEAN organization to develop that. So I don't think it'll be I think it'll be these bilateral relationships that'll really drive things forward. If that answers the question, sorry, it wasn't specific around Via, but.
I think ubiquity is going to be important. You're going to have a very critical mass of participants to really tip the scales. So I think there's a lot of people that have signed up, you know, different organizations, but they have to really push it and also add to that network so that you create the ubiquity and then that tipping point that causes the adoption.
Hello. Hey, first of all, this was a super informative session on real-time network. I have a question around refunds in general. I have observed that all these real-time payment network don't offer refunds as a baked-in product. What is your opinion on what is the deterrent in offering this as a solution? And do you think this is the missing leg in the RTP story so far? I mean, I observed PromptPay doesn't offer that. Singapore Pay Now offers that via some banks. In India, UPI is trying to build that. But why is presence of a seamless refund mechanism not there in an RTP network?
You know, I think that's the missing link. You know, these solutions were designed to be more account-to-account transfers, solving, like, as I mentioned before, the challenge of a wire versus a gyro or an ACH transaction. So the toughest part, and this is what the schemes and, you know, Visa, MasterCard, Amex, you know, these guys have really done a good job of is educating the consumer in terms of, you know, the protections that they get, as well as, you know, if you have a dispute or if you need a refund, you know, those things are available, right? So it's going to take some time for the networks to kind of adjust to these solutions. In the meantime, you know, you have to use a technology provider like ourselves to bridge the gap.
Yeah, and I think that's just kind of, I mean, the other thing that I've heard from merchants around Pay Now is the reconciliation is a big challenge. So I mean, at the end of the day, I don't know. At our local hawker center, I live in Yochikong, so in the heartland, so to speak, and our local hawker center, there's only a couple of places that actually accept QR code payments, and they just have their tape machine is sitting right there, and it just rings through, but they don't know if I bought a coffee or if I bought you know, egg sandwich or whatever. It's just, you know, a list of numbers, and so that reconciliation, not that it's any better with cash, right? Cash doesn't have a reconciliation mechanism built in, but I think the other thing to think about is this is Pay Now version 1, right? I mean, the credit card companies have had 50 years to innovate, or the credit card networks have had 50 years to innovate on top of that, and so I think, you know, things like refunds or chargebacks and reconciliation, yeah, I mean, I think that'll come down to the private industry to develop. I mean, similar to the point that we were talking about before, the government's responsibility in my mind is to create the platform and then the innovation that happens on the platform, the use cases that were there on top of that.
Yeah, and not to keep plugging our service, but this is the reason why you have to use a technology service provider to start accepting these types of transactions, because, you know, if you're a business, you may say, hey, I have a bank account, I have my QR code. Why don't I just pop that onto my website and, you know, off I go, right? But you're going to have problems with, you know, making sure that that's integrated into your back office ordering systems. How do you get the real-time notification that the order is complete? What do you do in the case that you have to send the money back? You know, things of that nature, right? So, you know, as a business, you know, if you try to do it on your own, you know, sure, you can start accepting payments, but you may run into challenges such as, you know, reconciliation and things like that. So it's important to work with these value-added service providers to get access to these technologies.
Yeah.
Yeah, I think that's where we talked about the consumer challenges, right? Because the request to pay type of use cases or the recurring use cases are more for merchant or business or consumer payments, right? And so they're not as quick to roll those services out because they know there may be a lot of challenges around disputes and things of that nature. So they actually roll that out a lot more slowly than in terms of kind of sending money to another account, which really that has exploded, right? I'm sure you probably used it the other day to pay back somebody for lunch, and that happens on a day-to-day basis. But the banks, the regulators, they all realize from a consumer payment, there's a lot of challenges that you have to work through. So the intent is to get there. I think it will get there soon, but they also have to kind of roll it out slowly so that you don't have really bad consumer experiences as they're shopping online.
Yeah, and I think here in Singapore, I mean, you guys have plenty of choices of payment methods anyways. Card is very convenient. You as a consumer, you don't pay for card. We were talking about this earlier in the week as well, but one of the things that impressed me whenever I came here and I was standing behind a millennial is not so much now because everybody's using mobile payments, but the selection of credit cards that the average Singaporean will have, and then they'll say, okay, I'm at a restaurant, I'll use my UOB card, or I'm at a grocery store, I'll use my DBS card, whichever gives the best rewards points. I mean, that seems to drive consumer behavior so much, and even for myself, if I see a GrabPay QR code, I'll think, okay, it's going to take me a little bit longer than it is to just wave my phone to scan the QR code and type in the amount on GrabPay, but I get points for that, right? I get less points than I did 2 years ago because they've devalued everything, but that goes into, certainly on the consumer side of things. The other thing I would say is just, it really does come down to what is the point of friction. Like in China, and I checked this, I was in Beijing in December, it was the last time I was in China, and all the cards are IC chip and pin cards, right? Like you would have here with a little integrated circuit. So to make a payment with a card in China, in most venues, you stick the card in, you type in the pin, and then you sign. And that whole process takes about a minute to communicate back and forth for the approval and the acknowledgement and authorization. But with a QR code, it's 5 seconds. It's even faster than Pay Now here in Singapore because in many cases you're displaying a dynamic QR code that is a pull payment rather than a push payment, so it's even faster in that. So I think the adoption, QR codes are a good example. The adoption of QR codes really varies depending on what the market dynamics are. In Singapore, I don't see QR codes being the primary method of choice just because mobile payments, tap and go, either with a card or with your phone is so convenient here that, I really think the only reason that people are using it are for the reward points. Otherwise, you'd just be using your card, especially in a place that's 98% of the population is banked. In places like in China, we've talked to, just to give you a kind of a brief case study on financial inclusion around QR codes. Ant Financial, or Ant Group, is one of our clients, and we were in Hangzhou, I guess about a year and a half ago, and we were visiting this scooter repair shop, basically. So it's probably about as big as this here. So the guy, Mr. Joe was his name, had kind of 8 or 10 scooters that he was selling, as well as a few that he was repairing, and then parts there. And so we were talking to him about his business, and when he set up the business a couple years beforehand, he was borrowing from friends and family to fund the business, because it's reasonably capital intensive, right? You have to buy these scooters that you would buy for the equivalent of like 500 Sing dollars, and you would sell them for 800 or something like this. So, you buy 8 of those. You're not, as a small, medium enterprise, you're not going to get them on consignment. You're going to have to buy them and hold them as inventory. So there's a bit of upfront capital that was needed. He started using QR codes to accept payments from Alipay or WeChat Pay. So when you look in his shop, there's 2 static QR codes on the wall that people could scan and pay into that. Ant Group, one of the things that they do through the MyBank entity is they look at the transactions that are made on the platform. So if you think about your payment habits, it's likely a mesh, right? So, Richard may go to lunch with Irina, they settle using GrabPay or Pay Now, right? And then you may send money to your kids, and the kids may send money to their friends, and the friends may send money back to you or to the school. It's kind of this mesh where the payments kind of go around within a known set of consumers. But if you think about something like a scooter repair shop like this guy had, it's more of a hub and spoke. So the merchant is sitting in the middle, and then there's multiple different customer relationships that he has. So he maybe has 1,000 customers, 100 of which know each other, but for the most part, they're kind of disconnected. So Ant Group is able to look at that information and say, okay, this person is a merchant. And when you sign up for an Alipay account, you can have a consumer account or a merchant account, but they don't care which one you sign up for. So you can be a merchant with a consumer account, basically. So Ant Group recognized this about Mr. Joe, and they said, okay, we recognize that he's a merchant. We have all of these transaction history because he's paying his suppliers, he's receiving money from his clients using Alipay. So we have this kind of credit history that we can take a look at. Do you want to borrow some money? And so he started borrowing money from the MyBank platform, and over the course of the next year and a half, he built up a credit line of $15,000, the equivalent of US $15,000 on that platform. Now, for Mr. Joe to go to the bank and try and get money would be really challenging because we've done studies on this, like with Bank of China, it costs about $250 to $300 to originate a loan. So that's reviewing the loan application and actually making a decision on that, and it takes about a month. So if you're borrowing $1,000, if the cost is $250, the bank's not going to deal with you. It's too costly to lend to you. But on the MyBank platform, it costs about 25 cents. And it takes what Jack Ma famously referred to as 310, which means 3 minutes to fill out the application, 1 second to get a decision and get the money dispersed, and 0 people involved in that transaction. So when you look at that, the baseline of all of that is real-time payments, effectively on the Alipay platform. But what you can do to layer other products and services on top of that is really incredible. And the financial inclusion element of real-time payments is something that we shouldn't overlook, because I think, in Singapore, it's very easy to think about, I'm going down to Shake Shack right afterwards to get a burger because I rarely come to this area, and I'm going to use a card or my phone to do it. But for people, especially around Southeast Asia, when you look at Indonesia or the Philippines, where the financial inclusion isn't so good, infrastructure isn't good, these platforms really provide the basis of economic empowerment for hundreds of millions of individuals across the region.
Building off the last two questions, would love to hear your thoughts on what sort of consumer protection could look like for real-time payments. And I think Visa and MasterCard do a very good job of making the customer feel safe, but that often comes at the expense of a merchant or an acquirer. So yeah, would love to hear how consumer protection could look like and be maybe more equitable across all the nodes in the ecosystem.
Yeah.
The way I see this, I think they are working on that to kind of see how they can adopt different policies to mirror, some of the protections that you get from a card standpoint. Also, there's general consumer protection laws in each country. If you got frauded, where do you go to get the money back and things like that. But nobody wants, as a consumer, you don't want to go through that experience, ever, right? So I think the role and where the adoption will happen is it'll become more merchant-based, right? Like when you go shopping on Amazon or eBay, even though you're buying from some SMB somewhere, you're not sitting there thinking, I have to go to that SMB if I have a dispute, right? I could just go to Amazon to get my money back. So I think there's going to be a lot more platforms and merchants and marketplaces that actually help consolidate and help build that trust, on behalf of the payment system where, typically in the past, the payment system provided that protection.
Yeah, I would agree.
Sorry, I wanted to switch topic a little bit into one of the latest announcements, which is on the digital banking licensees. And I know that Zennon, you have looked into, you've made some predictions on C. Is this right? I know how to pronounce it actually. So the conglomerate, and a couple of weeks ago, you've predicted that they will get the license, and they did. So you've done clearly a good job of analyzing the reasons for that. And I would like you maybe to comment on what are those reasons why C got the license, and possibly some predictions as to what will Ant bring into the digital banking ecosystem of Singapore based on all of your past experiences.
Yeah, we were 3 for 4 on the digital banks. We had my
not the Greenland.
Yeah, Greenland. My next blog post is going to be WTF is Greenland, because I had never heard of them before I mean, they were really truly the dark horse in the background of that. I think what Grab, Singtel, and Sea bring to the market is the customer base. And especially when you look at the digital full bank that they have the license for now, that customer base is going to be really important to get things going, right? Because you, especially on the retail side of the business, I think cost of customer acquisition, and Grab has experienced this over the past couple of years, is incredibly expensive. So our thinking on that, and a good comparison is Razor, right? So Razor did not get the license, and Razor was banking on all of these gaming millennials joining the platform, but that's a very niche part of the market. And whereas Grab, Singtel, I mean, now there's more choice in the mobile communications market, but they have millions of consumers between them that they can immediately kind of bring into the platform. So I think on the digital full bank side of things, I think that was one of the key considerations, was what is the consumer base? Because I think the government recognized, like, if you were to give, I mean, Ant wasn't applying for that, but if you were to give Ant as an example, the digital full bank license, where would they start, right? They have to start pretty much from scratch and build it up from nothing. And that's, I mean, if we compare it to the other banks, like the Revoluts and the Monzos of the world, I mean, Revolut is here in Singapore and they had to build from scratch. So you have to build incentives and the cost of customer acquisition is really high. I think on the wholesale bank side of things, as they're more focused on SMEs, that existing customer base isn't so critical. It's more about the experience. And both Greenland and Ant Group obviously have a tremendous amount of experience in China lending to small and medium enterprises. And so I think that experience probably helped more in that decision processing on that side. But I for one am looking forward to, if you had talked to me kind of 6 months ago and you said, what is the potential future of digital banks in Singapore? I would have said not much, but in the previous 6 months, I've had to close and open a couple of bank accounts and apply for credit cards, and I changed from being employment pass to PR, and I totally believe that digital banks will now completely change the market, because the amount of process and paperwork that's involved in doing anything outside of Pay Now or just moving money between your accounts is ridiculous for the traditional banks. And so in the end, it's going to be beneficial for us, right? The consumers and the businesses, because it's competition. And so the traditional banks will have to up their game and continue to innovate. And then these new digital banks will come in with new products and services that could be quite compelling.
For me, I'm sort of a payments geek. So, I find this extremely interesting. It's going to be a lot of fun. I think it's game on for the industry to kind of see how, you could trust all your money, your financial services with an entity that's fully digital, right? Because people want to see where their money is. They want to go and grab somebody if they have a problem with their account and things of that nature. And we got people that are fully reliant on digital solutions. So to me, let's see how the new challengers go against the incumbents. And to your point, I think the consumers are only going to benefit. So I think it's going to be a lot of fun. All right. Thank you. Thank you.
Great. Thank you so much.
Thank you.